Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on supply and demand zone price chart analysis. A bit of a mouthful, but basically what I'm going to be talking about is supply and demand and how to trade imbalances in supply and demand, and really the reasons behind the psychology behind supply and demand trading, which is basically rarely talked about. I don't think I've actually seen it online the way that I'm going to explain it to you. So hopefully you stick around if you're a new trader, and even if you're an experienced trader who has traded supply and demand before, you're going to definitely find something useful on this video. So supply and demand, what we're looking for is really just imbalances in supply and demand on a price chart. And we're looking to trade, those areas. So what's commonly taught, if you've done any kind of supply and demand trading, would be you're looking for patterns where you see rally, you see a base, then you see a drop, then you're waiting for prices to really come back up to this base area, right? Because you're seeing demand, then you're going to see loads of supply pushing price down, and then there should be supply in the future when prices come back up to this zone. And that's the way it's taught, really. And then the same thing is the opposite, where you've got drop, base, and rally, right? The fact that there's an imbalance in supply and demand, there's more demand coming into the market. If the market does ever come back down into this base area where demand exceeded supply, traders will trade that area, right? Now, again, it's rarely discussed the reason why this happens. I mean, there's a lot of theories around, but I'm going to give you, my take and what I believe to be the real reason, and it will make sense to you as well, right? When I explain it to you. So the reason why there are imbalances really in supply and demand is simply because of perceived value, right? Now, again, value is determined by fundamental and sentiment analysis, and then that is really displayed on a price chart. All price charts really telling you the decisions of traders and buy and sell orders in the market at a particular time in relation to price, right? Where this is obviously price and this is time. So if we're looking at value, right, and we're understanding we need demand, people are not going to buy, traders are not going to buy unless, or press buy on their brokers unless they feel that something is cheap or undervalued, right? So when you get a scenario where prices are moving higher, right, this is demand, obviously, and this is traders buying, right? Buying. They've seen down here this price level to be an absolute bargain, an absolute steal, right? And traders are piling in, right? It's just evident from the chart, yeah? So when we get to a certain area on a price chart where we start seeing some sort of pullback, or supply, there's less demand coming into the market, right? What is that? That is what I would consider profit taking, right? So if you're buying down here, at some point you're going to want to take some profits, and if you press sell, right? If you're pressing sell on your broker, that equals supply, right? And buy order equals demand. So what traders are really doing who bought down here, right? We've seen this as an absolute bargain area. They've loaded up. They're buying, hundreds, thousands, potentially millions of whatever it is, whatever the product is. And then they're looking to obviously cash out at some point and make a profit. So when we have sell orders coming in, right, and take profit coming in, does that mean that the bears are taking over? Does that mean supply really is taking over and there's going to be a reversal in the trend? what we don't know, that's why I put a question mark. We don't necessarily know, but what I would say is that the first touch of any area, or first reversal of any area, I consider to be just take profit, right? It's just basically there's no more buyers coming into the market, or real buyers coming into the market, institutional buyers coming into the market, because they understand they bought down here and they don't necessarily want to be buying around here. What they're looking for is value. They're waiting for actually a pullback. So if this is the bargain area, right, this is a potentially, in the top would be considered potentially an expensive area, right? But we don't know for sure, yeah? Because if you're looking back on hindsight, this has to be true, right? This has to be the cheap area. And when prices start to pull back, this is where buyers are no longer willing to flood the market as they did around here in this area. Because if it was true, then prices would continue to move higher. So this is a potentially expensive area, right? Which we don't know, right? Because this is just like the first touch. This is basically where demand is just declining. Now, if prices do come back up to this level, right, this is where we will now see if potentially buyers would consider this value area here, whatever price this could be, 10 or whatever it is. If buyers aren't willing to push prices higher than that level, then this is now considered a potentially expensive area, right? Because on the pullback, you would get more demand down here. This is where people are looking to buy at value. This is bargain, right? So this is the absolute cheapest area that you could have bought at. And this is expensive. Any pullbacks are where traders are looking to get some sort of discount, which the 50% level between a cheap area and expensive area is actually known as fair value, right? So this is fair value, right? And that's only at the 50% level, right? And anything below the 50% level is what you would call, cheap or cheaper. And obviously the lowest would be actually rock bottom would be the actual cheapest, right? So getting back to this, if prices, if traders are buying at fair value, let's say for example prices retrace and then prices come up to here again. Now, if traders who are looking to buy this currency or commodity or whatever it is that we're buying, if they don't see this as being undervalued, then prices again are going to go down. And this then proves that this is an expensive area, because there is really not much demand past, this 10, let's say for example, it was £10, $10, whatever country you're in, this value, right? Demand, buyers are no longer willing to push prices higher. And this is really what we would call, when prices enter what we call a sideways ranging market, this is what we would call a value range, yeah? So we know this to be the absolute cheapest area, this to be an expensive area, and when prices can't make higher highs or break out above a certain level, right, and we're trapped between a high and a low, then this is what we would call a value range, right? This is where buyers are no longer willing to buy, but when we get a bounce down here, this is where buyers are buying in mass, and they believe that this to be an absolute steal, an absolute bargain, right? And they're getting the mass, hence the price pushing up, right? So sideways markets are really, or sideways ranging markets should be seen as value ranges, right? And the 50% between the expensive and cheap level is what you would call fair value, right? And then anybody who's into Fibonacci trading all you're really doing at 38.2% Fibonacci level and a 61.8 Fibonacci level really is just looking at a retracement and looking at potential value. That's all it is. So if that's the 50% level, 61 would be somewhere probably around here, and then you've got the 78.6 level. It's just understanding the cheapest area of a leg up, right? Because obviously demand is coming, pushing prices to the upside, right? And then when prices pull back, this is potentially an expensive area, and you're buying at the 38%, discount, 61% discount, and so on and so forth, right? When we're looking at retracements. So let's go back a bit, right? Now, at this point in time, let's go here, right? So now let's assume that when prices actually came up here, actually let me go back a bit. Let's go back. Right. So let's assume now that prices come back to this area here. Now, traders who, are buying, if they still consider, if prices break higher, right? Because we didn't know whether this was an expensive area or not. But if prices break through this level, because we said that if it doesn't, can't break past that high, then that's the point at which buyers are unwilling to buy, right? But if prices break through that level, then this area no longer becomes an area considered expensive, because basically buyers have seen the price, right? They've seen the price at £10 and they've said, you know what? I think this is still undervalued. And so they've again pushed prices higher, right? So understanding that, we can now look at this leg from this low to this high, which is now considered a higher low and higher high, right? You can't get a higher low without a new higher high being made, right? So this is the higher low, and this is only made when a higher high is made. So once buyers still consider this to be a potential bargain and prices go higher, a higher low is made. And what happens is when you think about it, a higher low would be considered cheap, right? Because buyers again bought in mass, right? So much that they pushed prices continually higher. Now, if you're looking back on the chart, right? If you're looking back, this has to be the first area where we have the strongest area of demand. Yeah, because like this low to this high, this low to this high, this has to be the first area or the first considered location on a price chart where buyers would have seen this as an absolute bargain. Again, so much so that it pushed price above what would have been considered an expensive area or take profit area, right? So higher highs, right, are considered expensive. So I'm not going to, do this out for you. My handwriting is terrible and I'll be here forever, right? And lows are considered cheap. In an uptrend, higher lows would be considered a potentially cheap area, right? Or the first location we would look to buy when understanding value, right? Because if this is now the high and this is the higher low, this area here is the higher low, what traders do, and they make the mistake, potentially, I wouldn't call it a mistake, but what they do is, because they're taught that, broken, resistance now should become support, they're buying here, right? I'm not saying that's obviously is a 50% level, but if you're looking at it from this might not be a 50% level, it might be the 38, might be, you know, even beyond that, wherever it is. But just for illustration purposes, you have to now take this as a potential range, this higher high to a higher low as potentially now the range at which the market could go in. Because like I said before, markets go from well, actually I might not have said it before, but markets go from a trending market, right, to potentially ranging market to a trending market, etc. Yes, markets can trend for a while and they can range for a while, but those are the two market states. But what we should always try to look for is and understand is where potential value is, right? And if you're buying at levels of you know, support and resistance, right, when the higher low down here, which is the cheapest area, and this would be the most expensive area, you're not buying at the best place. This is buying at this area here, right, around midway between a potential higher high and the higher low, isn't the greatest level when it comes to buying value. Yes, of course, you know, fair value is a decent place, but not the best place. The best place you really want to be buying, and the cheapest would be at higher lows, right? And this is really the key, right, to understanding supply and demand, and really the psychology behind supply and demand, level and zone trading, and identifying potential value, right? Because if I want to go a bit further, right, let's say for example prices, right, you might be thinking to yourself, why, if prices, you know, come down here and then they don't, you know, do anything and it fails, right? Now again, just from a fundamental and sentiment perspective, you should be aware of fundamentals and sentiment, because those are really the drivers of price, right? But let's say for example this potential range fails, then your next low to your high, yeah, let's say for example if this did represent, you know, 0, or let's say for example it represented 1, yeah, this would be considered, you know, the next, you know, bargain basement price. And then prices would have to range between the absolute high, which is potentially, you know, 15 or 20, whatever it is, and 1. And then we get ranges. And really, markets will trend within ranges, right? There's always a range on a higher time frame chart, right? If you was to zoom down into maybe the 5-minute, this would look like a massive trend to the downside. But I can guarantee you, if you look back on your price charts, that really we're always within a ranging market. And again, it just goes back to understanding what traders are willing to pay for, the price traders are willing to pay for a certain asset. Yeah, they will see 15 as potentially the all-time high, and there'll be no more demand up here, and no one's willing to really, or demand isn't really looking to go any higher. There's no demand at that price, and then you'll have a market where, you know, if it comes down to 2 or 1, you'll get buyers who understand, obviously fundamentally, that this is undervalued, right? And this is where they will start to pile in. So again, just looking at from a price chart perspective, these are the areas, higher lows, right? And in a downtrend, it would be lower highs, right? Would be the actual area where you'd be looking to potentially buy or sell a currency. So for example, let's draw a bit here, right? So lower highs and lower lows, right? You can't get a lower high until a new lower low is made. And if we understand that this area here is the area where people weren't willing to, buy, or I should say, supply exceeded demand, right, and push price lower, this has to be the strongest area of supply, right, for the same principles. And obviously, like with currencies, you know, we are buying and selling one currency against another. So if we were again just using the euro USD, then a downtrend would represent buying the quote currency, right? You'd be buying the US dollar, so you would be looking at this as potential value, be buying the US dollar, right? And then if prices came back up to here again, this is where you'd be buying the US dollar again, because you knew that in the past, this is where traders saw this as an absolute bargain and pushed prices, you know, lower or higher in the case of the US dollar quote currency. And this would be the first area again where we would look to try to take, or the cheapest area within this range between this high and this low. Yeah, and I hope that makes sense. So hopefully you've understood, and you've gained a little insight into basically how to trade supply and demand zones, and identifying the potential value on a price chart from a technical perspective, right? Understanding value ranges, and applying this method to your actual price charts, and look for higher lows or lower highs to be the absolute bargain level, right? That's where you want to look to really trade. 50% levels are fair value, 61%, you know, are a discount, and the closer you go to the first higher low is really where you should see potential value. Right now, one thing I've got up here is the difference between supply and demand, support and resistance. So I'm going to have to clear this chart. So now that the chart is cleared, the difference between supply and demand and support and resistance. So really, supply and demand, or I should say support and resistance, is supply and demand zones that have been really projected into the future, right? So in my previous example, we had a move up and we had a move down, right? Now, again, this, we don't know whether this is an area of a strong area of supply. We just know that there is, you know, less demand coming into the market, right? But it's still considered an area of supply, right? And what happens is if we get break, this was an area of supply that had been projected into the future as support, right? Same thing from the downside, right? So we might get some demand, and then let's say, for example, we get something like this. Traders would look at this and say this is support, right? Price has been supported, but really all it was and is, price is just reacting off of a previous area of demand, right? So, and that level was really just projected into the future, and traders will look to trade those levels to the underside, etc. That's all supply and demand is, right? And another difference between supply and demand is that traders will believe that, who trade support and resistance, will believe that the more a level is touched, right? So let's say, for example, it touches once, touches twice, touches 3 times. The more times a level is touched, the stronger it becomes. And I can understand why, because you would think they've attempted once, attempted twice, attempted 3 times and failed, right? So the more times they fail, you know, the stronger this area, you know, is defended. When if we're looking at it from 2 perspectives, and the first is from just a technical perspective, if the stronger a level becomes, or the more it's touched, the stronger a level becomes, then what you'll have is perpetual, you'll have perpetual resistance, right? And you'll have perpetual support. Prices wouldn't go anywhere because every time a level is touched, it will just keep getting stronger and stronger, right? So you have something called price discovery, which is the reason why, and understanding if this was a value range, if this was expensive, right, and this is cheap. Buyers are buying here, but no one's willing to buy up here. Price discovery would mean that at some point something is going to change, and this is normally through some sort of fundamental shift in the value of one currency against another, and this could be down to interest rates, GDP, politics, risk on, risk off. So you have to have levels have to get weaker. No matter how many times they touch, at some point you're going to get a breakout to the downside and price discovery to the upside, right? And also from the perspective of value, right? When, let's say, for example, let's go back a bit. Right, now, we know that this would be the range that I'm looking for, right? This is going to be a high or higher high, and this is a higher low. Now this is my potential range. This is where I'm considering this to be an absolute bargain, because we're looking at it from that's the high, that's the low, that's where demand was actually its absolute strongest, and then it got to its absolute weakest right here, right? And this is fair value. Now if prices do come back down to here, this is the first area where you want to look to be a buy. You want to take advantage, right? Obviously you got to look for sentiment, price action. How you enter is how you enter. We're just looking at potential levels of value, right, in the future. Oh, sorry about that. Now, the more times we touch, second time, potential third time, this now stops becoming a bargain, right? Because it was a bargain before. Now it becomes ordinary, right? This is where traders are used to prices being, right, at this level and at this price zone, right? Because now traders are thinking to themselves, oh, okay, well, it's been at this price before, it's been at this price before. It's no longer seen as an absolute bargain the more times this price is visited, right? So if you think about it from maybe a supermarket point of view, let's say, for example, there's a product that you've never seen on discount before, and you decide, it suddenly decides to go on discount and it's 50% off or 80% off. You're going to think to yourself, well, I've never seen this on discount before, I'm going to buy as much as I can. Then prices, obviously, it was for a limited time, and then they do it again, right? The supermarket. And then you're thinking, oh, this is a steal. But then the more, they do it, it's the more now is that really a bargain? Now they're going to have to get maybe 90% off or 95% off or give it away for free for you to really be interested in this type of price level. So it works the same way, right? The first time is where you really want to take advantage. Yeah, the first and second times, you really want to start taking advantage of when to buy, right? This is the optimum time to try and look to take advantage and capitalize from an absolute bargain, right? The second time as well. But when you start getting into the third and the fourth time, this is where it starts to get suspect. So really, whereas supply and demand traders believe that the more touches a level has, it becomes weaker, right? The supply and demand traders, the support and resistance traders are, believe that every time it gets stronger. So I hope this has helped you understand, supply and demand a bit more. And when you're looking at a price chart, just try to apply certain principles. Try to look at where, potential value is, right? And even if you get, a situation where you get a higher high, higher low around a market high, yeah, because obviously you're gonna, if you get something like this, right, and then you get a little thing like that, what you got to look for is really the overall swing, right? And my advice, I trade off of daily charts, because that's where the most supply and demand, daily and weekly charts, because again, that's where the most supply and demand takes place throughout the day. Lower time frame charts like the 5-minute, 15-minute, you know, are you're only really getting a snapshot of supply and demand throughout the day. And that's not to say that you can't trade those levels using the same principles, but I use daily and weekly zones. And if you want to, you know, get a weekly update on supply and demand levels and apply this to some candlestick trading, not just lines on the chart, just sign up to the weekly supply and demand technical analysis in the description box below, and you'll be updated every week with my daily and weekly levels. All right, and that should assist you in understanding where to buy and where to sell when it comes to supply and demand. So take care, and I wish you all the best in applying the supply and demand principles I've displayed and shown you in this video. If you like, you know, leave a comment, or you can email me at info@trading180.com. Take care.